time if you ever needed a signal that financial conditions were starting to loosen, it's the return of mergers and acquisitions, and specifically within the financial technology sector. What's up, apes? Welcome back to another edition of the Daily Peels Daily Podcast of the Day. Thank you all for joining us here once again. It is a beautiful Monday, if such a thing exists, at about 5:31 p.m. here today. So we're coming at you with a little bit earlier version of the pod here today. I will absolutely lose my fucking mind if some market moving news comes out between now and like 9 p.m. when we usually film, but nonetheless, let's go ahead and rip it right now. So we got a lot going on here today. Very good day, not necessarily in markets, but for the WSO Alpha portfolio, it was particularly solid because we were smart enough to stay away from that piece of shit Apple. You guys know Apple. It's basically the corporate equivalent of like a shit coin, like a meme token, basically. This thing's a complete pump and dump. I think you can definitely ignore it forever. But nonetheless, because we avoided Apple, the Alpha portfolio was able to outperform pretty substantially on the day. WSO Alpha up 0.17%, aka 17 basis points for the session. Meanwhile, the S&P 500 was up a measly little 13 basis points. Fucking pathetic performance. Then the NASDAQ, I don't even want to say it because it's so embarrassing, but they were down about 52 basis points on the session here today. Pretty rough day once again because Apple was down a little bit less than 3%. Very rough day for Nvidia as well, and pretty much all chip stocks, all things that we'll be getting to a little bit later on in the conversation. Russell 2000 up 36 basis points, and the Dow, if anybody cares, is up 55 basis points. I don't know why anybody would care about the Dow, but you know, in case there are any boomers watching this that might want to get checked in on that. We got a lot to talk about here today. First and foremost, I know we talk about things coming back a lot, but we really mean it here today. M&A is back in 2024. It is officially that time. If you ever needed a signal that financial conditions were starting to loosen, it's the return of mergers and acquisitions, and specifically within the financial technology sector. So a lot of things going on within that sector. We got a bunch of charts that we want to break down here with you guys today and show the return of transactions coming to the financial technology space, or Fintech as the cool kids like to say. We're also going to be moving into some of our big stock movers of the day. You know, we got an 88-year-old activist investor that should have retired more than 2 decades ago, who just got a huge win. Hopefully, it's kind of like winning a Super Bowl. It's like that kind of a thing where, you know, you win the championship and then you retire. He just won this court case. Hopefully, he retires afterwards, but we'll break it down more specifically in a little bit. At the exact same time, Alcoa just got involved, or actually uninvolved, I guess. They divested from a big deal that they've been working on over in Saudi Arabia. Apple fell apart. Very underwhelming demand for its iPhone 16 compared to the iPhone 15 launch last year, which is pretty surprising because the iPhone 15 was purely another one of those, like, yeah, it's slightly faster and the camera's a little bit better, whereas the iPhone 16 does have actual changes, I guess, or like software enhancements on certain things, but nonetheless, and it's got that little scrolly thing on the side where you can zoom in and out of pictures just using the side of the phone rather than like squeezing and like doing whatever kind of shit like this. You guys can tell I'm not much of a photographer, but still, nonetheless, there's a lot of changes going on there. And finally, we got chip stocks down bad on the day. This auto sales report, it seemed like it was absolutely nothing, but it is completely destroying the semiconductor market, at least on Monday. Finally, we'll be breaking down TikTok versus everybody, that court case that everybody was freaking out about earlier this year. The quote-unquote TikTok ban bill is officially in a trial as of today. So we'll talk about exactly what you can expect going forward for the app, for the company, and for yourself, most importantly. All right, before we get into our big stories of the day, let's start out with some of the banana bits, the stories that we, of course, wanted to bring to your attention, but didn't really care enough to write about, at least today. We might write about it going forward, especially this first one, because if you look at the supply side of inflation, or specifically the M2 money supply divided by GDP, what we're seeing is what we expect to see is a continuous decline in the CPI based on those readings because of the declining M2 money supply relative to the growth rate in GDP right now. So overall, we're still looking on a downward trajectory for inflation. Very good thing to see. It'll be interesting to see how that impacts the election as well, but let's go ahead and stay away from politics as we usually do. That's playing with fire, if you ask me. Meanwhile, Salesforce Ventures. This is the venture fund internal to Salesforce, aka the ticker CRM, Mark Benioff's venture portfolio. Just another way that these tech founders can play God in their own mind, essentially. They just pumped $1 billion into their artificial intelligence venture fund. It was at $500 million, so it's not like it is a huge fucking change, but it's not like they just pulled $1 billion out of their ass. They pulled $500 million out of their ass, which is still impressive, but a little bit less so than doing the full $1 billion. But still, it just shows how ballsy and how fired up they are about artificial intelligence. And for a company like Salesforce, it makes sense. They have a lot of access to internal data that no other companies would be able to scrape or even get access to. So that could be, kind of a sneakier AI play right there. Meanwhile, the real life version of Succession is actively playing out as of today. As of Monday, in a courthouse in Reno, Nevada, the Murdoch family is at each other's throats. We got Rupert and 𝗥𝗡𝗚𝗛 against, I forget all the other people's names. Elizabeth, I think, is one of them potentially, but either way, what's going on here is basically Rupert Murdoch, the founder of News Corp, the sprawling media empire that owns, everything from the Wall Street Journal to Fox News and all these different ones. They are in court because Murdoch wants to change the conditions of the trust so that when he passes, basically all of voting power goes towards his son, 𝗥𝗡𝗚𝗛. 𝗥𝗡𝗚𝗛 has a little bit more of a conservative political outlook, whereas the others are a little bit more progressive, at least compared to Daddy Rupert. So he wants to keep it on the conservative side. We'll see what happens. Nevada tends to be very friendly to trust, and especially revocable trust, which is what this is and why they're able to even consider making these changes going forward. So we'll see how that plays out in court. But either way, it's pretty interesting to see a real life Succession. I hope somebody makes a documentary about what's actually going on here. But a lot of the information, this is like the most restricted court case that we've ever seen in the United States. There's no information that you can find on it whatsoever, but still, it's a lot of cool stuff going on out there. Meanwhile, Intel was up big on the day. I actually didn't see how much it did rise by the close, but let's go ahead and check it out right now. Up 6.36% on the day, and then up another, 11% after hours. And if we go the full after hours, it's up 8.6%. So damn, very impressive performance from Intel. Basically what they did is they came out and said they're going to spin their subsidiary, or their subsidiary, they're going to spin their foundry into a subsidiary business, and that opens it up to the possibility for outside investment. So investors were fired up on that. Finally, this is probably my favorite Florida Man headline of all time, or certainly up there. Our first Florida Man headline at the Daily Peel too, so welcome to history right here. But a Florida man sued his realtor after he sold his house in Miami for $79 million, which was actually, believe it or not, under the asking price, if that's possible. He is suing his realtor for failure to disclose that the buyer was fucking Jeff Bezos, the fucking second richest man in the world. They didn't disclose that it was him. I don't think that you necessarily need to do so, but the rules are very different. Real estate rules are very different on a state-by-state basis, so who knows what's actually going to happen, but he could have sold it to him for $10 billion, and Bezos would have been totally fine, so I get why he's a little bit upset, but I don't think he's necessarily going to be entitled to any financial remuneration. Okay. With all that said, let's go ahead and get into our big story of the day, because we are officially backer than ever. So we talked about this a lot. 2024, it's the year of coming back. Like Chris Pratt said in that hysterical clip, it's the Kim Kardashian year. It's the year of comeback. So we're very excited to see a presidential debate, interest rate cuts, funding proxy wars around the world, all the things that the United States is best at, most of all powering mergers and acquisitions. So that's what we're seeing in the financial technology space right now, because according to a recent analysis published by FT Partners, I believe that's Financial Technology Partners, it's literally a company dedicated to just providing data on the fintech industry. They published a global fintech M&A review, basically a what do they keep calling it? An almanac. I thought that word died in the 1700s, but still, it's apparently the almanac on fintech so far this year. Specifically, they're focused on Q2, but we're kind of amalgamating this all together with the first quarter because it's been quite a big change in 2024 compared to 23. In the second quarter of this year, we saw M&A transactions in the fintech space spike 20% on both an annual and a quarterly basis. So a lot more activity going on in the second quarter, and I think we all know exactly why that's happening. This is a huge example of the Federal Reserve kind of implicit tool of expectation setting. So it didn't even take actual interest rate cuts in order to motivate transactions within the financial technology space, which is a sector that is particularly rate and general macroeconomic sensitive. It didn't even take actual rate cuts to start, kind of forcing more activity to be going on within that sector. It's just the idea of rate cuts going forward is already spurring a hell of a lot more activity. Can you imagine what's going to happen when we actually start to cut rates? So let's get into some of the specific numbers. 348 deals were signed, the most since the first quarter of 2022, and the sixth most for any given quarter on record here in the United States. Not too shabby at all. Definitely not a bad thing. And especially with kind of what we were hinting at beforehand, the return to M&A within the fintech space is a great signal for the overall economy, because I don't know about you guys, but it seems pretty obvious that business owners aren't going to be making huge billion-dollar changes and deca-billion-dollar investments into other companies when they expect a recession is barreling right towards us. That doesn't exactly make a whole lot of sense, to shell out billions of dollars and to load yourself up on debt when you expect financial conditions to get worse going forward. So if anything, this is like the clearest signal that we could have. And notably, it's not a fucking survey where you're like, yo, what do you think's going to happen in the economy 6 months from now? This is voting with your dollars. It's 𝗟𝗟𝗡𝗚𝗛𝗡's quote of, don't tell me what you think, show me what's in your portfolio. And so by showing that they're willing to make these investments, they're implicitly showing confidence in the US and the global economy going forward. Speaking of expanding it to total global volume, so we saw a total deal volume of about $118.1 billion worth of M&A transactions within the fintech space in the second quarter. Now, that is slightly above the total, or that's actually the first half of the year. That's not the second quarter, that's the total first half of the year. That is slightly above the entirety of 2023, which saw about $102.9 billion. So it's a 14.8% increase. But that definitely deserves an asterisk next to it because the $35 billion mega merger between where Capital One is purchasing Discover Financial is heavily skewing that higher. Now, if that was removed, it would be $82.8 billion on the global fintech M&A scene so far in 2024 as of the end of June of this year. Still definitely on pace to outperform 2023, but it's much more impressive to say that, we're halfway through the year and we're already beating 2023. Still very impressive numbers. Even without that deal, it'd be worth more than the full year of 2016, roughly in line with the full year of 2017. But it's not just mergers and acquisitions that are bringing the space back to life. Financing transactions are also huge within the private space right now. Currently, so far this year, the number of financing transactions has totaled about 1,956. This is global for the entirety of the fintech space. Annualized, that's expected to amount to about 3,912, which is a new annual record. So 2021 and 2022 were kind of the boom eras for mergers and acquisitions, especially within the fintech space, because see, again, when financial conditions are easy, planning in, the financial services sector becomes a lot easier as well. So you're going to see a lot more of that merger and acquisition activity when conditions are easy. And getting access to things like credit and other tools to actually pursue these acquisitions becomes a little bit easier. So 2021, there was 3,705, 22, 3,701, and this year we're poised to set a new record at 3,912. All great things to see, and the reason that this has kind of been allowed is because the IPO space is back in action. So, believe it or not, in the United States, total dollar amount of IPOs in the fintech space in 2022 was about 100 million. And in 2023, it was less than 100 million. It's rounded to zero in this. Now, they only round to the first decimal point. So all that means is that it was lower than 50 million worth of IPOs in the fintech space in the United States in 2023. Now, in the first half of 2024 alone, there has been $2.9 billion worth of IPOs in the United States fintech space. Now, the reason that this matters is because in order for those private transactions to be going on, in order for companies to want to invest in a private company, like why would a venture capitalist invest in a private company if he's never going to get his money out? There has to be some kind of a path forward where they can exit and ultimately take a return. That's what the public markets are for, largely. It's so that private investors can dump their fucking gains onto us and we can take all the losses on their behalf. So that's basically why you're seeing this come back into action, because once again, financial conditions are easing, opening up the space for IPOs, and that's kind of spurring the private markets a little bit more. It's interesting, if we take a look at the sectors that have been the most popular here too, banking and lending is easily the most popular at $6.6 billion in total financing so far in 2024 as of June of this year. That's followed by financial management services, wealth and capital management, tech, payments, and then crypto and blockchain at $2.9 billion. Can you believe it? Turns out this sector actually has some value when you're not just pumping fucking 𝗟𝗔𝗡𝗗𝗚 or Joe Biden coin. I don't know which one of those would be more worthless. I'm pretty sure when I looked earlier, 𝗟𝗔𝗡𝗗𝗚 actually traded higher than Joe Biden. I wonder what kind of a pairs trade somebody might want to put on that going forward. But either way, there's no liquidity in that market. Please stay out of there and do not put any money into it. The leading companies within the crypto sector within there are companies like Monad, which is a smart contract platform, and then MAR Mining, which is a cloud-based digital asset mining provider. So, very interesting scene going on in fintech right now, but once again, this bodes well for the economy because it shows that financial conditions and overall macroeconomic expectations are allowing for these big transactions, these big mergers, these big investments. All of that speaks to optimism going forward from the financial services sector. What more could you want for the U.S. economy? I mean, that gets me pretty fired up. Not even the U.S. economy, the entire global economy. And we know the U.S. is going to lead it because obviously, but it's great to hear that fucking the UK might have a decent year for the first time since before Queen Elizabeth was born. So shout out to all the English apes, I guess, out there. Anyway, let's go ahead and move on into our big stock moves of the day. We have Icon Enterprises first and foremost, up 14.54%. I actually made it through this one without making any of those cringe iconic jokes, so I hope you guys are proud of me in tomorrow's piece. But nonetheless, most of us learned how to quit while you're ahead in elementary school. It's kind of a basic idea that you kind of want to, leave them wanting more, quit while you're ahead, leave on a good note. 𝗏𝗏𝗏𝗏 missed that day of school. I don't know what happened. Maybe he was sick, but the old vet, he's 88 years old. He's been in the game since fucking the Reagan administration. So a little bit ridiculous that he's still out here making these decisions. And yes, that's probably why the company's been in a lot of trouble lately, but they just got out of the biggest trouble that was facing them right now. And that was a big pending lawsuit. There was a pending class action lawsuit against Icon Enterprises triggered by the Hindenburg Cell report. Hindenburg, for those that don't know, is a famous short seller. They killed firms like the Adani Group. They killed Nikola, which really kind of brought them to popularity back in 2020, 2019-ish. Whenever exactly that was going on. I know I was in college when that was going on, but I don't remember the exact year. Nonetheless, they came out earlier this year with a fiery piece against Icon Enterprises, basically saying that the company's not doing the proper disclosures about borrowings against the stock. Carl Icahn was borrowing a lot of money against his shares in Icon Enterprises, and there was just huge conflicts of interest going on. So there was a pending class action lawsuit, but that has just been dismissed by a federal judge who basically said that, Hindenburg and the other short sellers that would be part of this class action report basically had no case to stand on. They did not demonstrate that there was any material misinformation, material omissions, or an intent to defraud investors. So no case, no harm, no case. That's basically what's going on here with Icon Enterprises. Moving on down, we have Alcoa. This is the Aluminum Corporation of America, one of my favorite acronyms of all time, potentially. Alcoa was up 6.09% on the day, close to being a very nice return, but we'll take a 6.09% day. Basically, what happened with this company, they were involved in a joint venture with a Saudi Arabian aluminum mining firm that's called it's 𝗚𝗡𝗚𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏 say it. But basically, 𝗟𝗚𝗟𝗘 and 𝗥𝗢𝗟𝗘 had this joint venture that was going on in Saudi Arabia. The joint venture was called 𝗥𝗢𝗟𝗘 Joint Venture, so a little bit confusing there. Nonetheless, 𝗟𝗚𝗟 must have been just as confused as I was when reading this piece, because they decided it's probably time for us to get out of this. So they had been, since about 2008, roughly a quarter percentage owners of this company. They owned about 25.1% of this joint venture. They've decided now in 2024, this is really no longer for us. So they are going to be selling their stake back to the parent company, 𝗥𝗢𝗟𝗘, for $1.1 billion in total. They're getting $150 million of that up front. The remaining $950 million is going to be in shares of 𝗥𝗢𝗟𝗘. They're subject to a 3-year lockup period, then a 3-year vesting period following that lockup. So by the end, by September 2027, they'll be able to sell, but they'll only be able to sell about 1/3 of their holdings. Then they can sell another third in 28, and another third in 2029. That's at least what the plan looks like as of right now. We'll see if it changes going forward, but investors were loving it. They love the cash infusion at a time when 𝗟𝗚𝗟𝗃 definitely needs it. Moving on into our piece of shit stocks on the day, we have this shitco meme coin, Apple Computers, whatever the fuck this company is. Never heard of them personally. Stock is down 2.78% because apparently analysts haven't watched our latest podcast and video stream of the day, which is weird because this is the most influential and popular podcast and video stream in the entire world. But apparently Wall Street analysts missed the latest edition. Bearish views on demand for the iPhone 16 emerged because within the first weekend following the launch, sales were down about 12%, or pre-orders were down 12% compared to last year with the launch of the iPhone 15. I ordered an iPhone 16. I'm doing my part here, fellas. So any Apple shareholders, don't get mad at me. You can go ahead and get mad at everybody else. I'm out here actively wasting my money so that your portfolio can go up, and I haven't gotten any thanks from it whatsoever at all. Keep in mind, David at wallstreetoasis.com. Feel free to shoot me any thanks. I'll give you my Venmo too if you really want it, but not asking for anything too much. Plus, there was also a lot of other things that were kind of pulling demand lower, such as Chinese competition. We're seeing a lot of smartphone makers kind of pop up to compete with Apple in China, especially now that the US and China hate each other more than divorced parents at this point. So it's a little bit difficult to get Chinese consumers to like American products, or American consumers to like Chinese products that are kind of like explicitly Chinese. We don't have necessarily a lot of those, but in China, when you see an iPhone, when you see a Tesla, you know that it has like American connotation. So allegedly, they're not too hot and bothered by that anymore. Well, maybe not too hot on it, but definitely bothered. Speaking of bothered, we have chip stocks down 1.33% for the session. Chip stocks, in recent years, they have made many millionaires. Many a millionaire have been made by these chip stocks, but they've also made quite a lot of former traders in the process as well. And yesterday was definitely one of those days of more so making former traders rather than making millionaires. So again, we saw the chip stocks ETF, the Philly Semiconductor ETF, down 1.33%. The ETF is called SOX, which I think is a little bit weird, but nonetheless, let's talk about the stock that everybody actually cares about. That is, of course, NVIDIA. Shares were down 1.95% on the day. There wasn't any huge news that brought down the semiconductor sector, but the sector did have a particularly good week last week. They rose a little bit less than 10%, about 9.7% from Friday's close to Friday's close. So it makes sense that there's a little bit of that profit taking, especially in the context of last week's auto sales report, which showed a huge decline in the United States auto sales. At least the rate of increase declined quite a bit. So semiconductors are a huge input for auto companies because, you're basically driving around a computer with wheels nowadays, so it needs chips to run itself. And so a lot of the companies like Skyworks, like Qorvo, who have a large portion of their revenue that comes from these automakers, they suffered a lot more so than, companies like NVIDIA that run the entire world of AI. But at the exact same time, there was still concerns over the demand for artificial intelligence hardware, aka NVIDIA's GPUs. It's really just this earnings report. It's still those lingering fears. It's been up and down since then, but overall, the big diagnosis is that uncertainty has reached a fever pitch within the semiconductor space. It certainly could continue to go higher, but it seems like it's at its highest point that it's been so far since NVIDIA started ripping back in late 2022. Okay, moving on into our last story of the day, our thought banana. We are talking about dancing with spyware. Many of you out there, and many of you with girlfriends, I'm sure, are well aware that this has apparently been a very mindful and a very demure brat summer. At least this is what my sources are telling me. Trust me, I don't use this fucking spyware, but still, that's what my sources are telling me right now. It's a very mindful, very demure brat summer, but nonetheless, unfortunately for everybody, that might be coming to an end. Everybody's favorite app and the Chinese government's favorite spyware system ever created is officially on trial in the United States. The Tik Tok ban hit the courtroom on Monday along with Rupert Murdoch and his family. It's a big day for U.S. courts going on right now. So, TikTok began its courtroom war against the TikTok ban. They're going up against the Department of Justice. Now, keep in mind, TikTok is one of, if not the most popular apps in the entire world. Now, if we combine TikTok with Douyin in China, I'm pretty sure it does get to the most popular app in the world. Beyond that, of Facebook, beyond Instagram, it's ridiculously popular. They have about 180 million users here in the United States and a whole lot more around the world. There's several countries in which they have more than 100 million users. It's like probably somewhere between a quarter and a third of the entire global population uses TikTok on a monthly basis. Now, TikTok is going to be going up against lawyers from the Department of Justice. And the basic argument that TikTok is going to be making is that banning their social media app is a violation of the First Amendment by restricting free speech and restricting free assembly. Now, the Department of Justice says that is absolute nonsense. This has nothing to do at all with speech. This is purely a national security issue. And because we can't see the source code, we don't know if the Chinese Communist Party is influencing the TikTok algorithm to make Americans hate themselves more than we already do. Trust me, China, the US does not need help learning how to hate itself. We already do that plenty. That's what our high schools and college do nonetheless. So you don't need to be putting in too much work on that front. So really, they could probably get away with this because we'll probably cannibalize ourselves in a couple of years. Anyway, nonetheless, we try to stay hopeful here at the Peel. So what's the impact that this would have on ByteDance? Well, first and foremost, you should probably know ByteDance is the single most valuable startup in the entire world, last valued at around $225 billion in its last fundraising round. That's above SpaceX at about $200 billion, above OpenAI with an asterisk, because OpenAI's last actual valuation was about $86 billion, but they're now looking at about $150 billion. It's probably going to happen, so that's why you see the little asterisk on it in the chart. Next up, for the most valuable startups in the world, I'm going to list the remainder of them, so feel free to skip forward 5 seconds. We have Stripe, Shein, Revolut, Databricks, Fanatics, Canva, and Epic Games. ByteDance is about 10 times the size as Canva or Epic Games, so just keep that in mind as we go through this. And TikTok makes up roughly 14.6% of the company's revenue, at least in 2023. This is TikTok in the United States only makes up about 14.6%, according to a Reuters report, which is basically the only estimate that I could find. So take that with a grain of salt. Nonetheless, if the DOJ gets what they want and ultimately forces a ban of TikTok in the United States or a divestiture to an American company, to a consortium of American or international companies, if the Department of Justice gets what it wants and takes TikTok US out of the hands of the Chinese parent company, it's not going to hurt the company too badly. Now, losing 14.6% of your revenue, that's fucked. That completely sucks. But they're the most valuable startup in the world. They can certainly handle it if anybody can. Plus, at the same time, TikTok's revenue mix is shifting away from purely advertising. It's getting more into the e-commerce side of things. Now, that could hurt the company a little bit more because if you're getting into e-commerce, you need to be in the United States. It's the most valuable, most wealthy consumer base in the entire world. That's where you want to be if you're going to run e-commerce and make that a large part of your revenue. We've been seeing it steadily increase as part of TikTok's revenue mix. So that is really where the major concern comes in, that this growth trajectory from the e-commerce side isn't going to be nearly as valuable, and they might face down rounds and further valuations or further fundraising rounds. Probably should just go public sooner rather than later. But nonetheless, that's kind of the story of what's going on right now. So the DOJ is saying this is this is national security. We need to get this thing out of here. TikTok is saying, no, this is free speech. You need to keep this here. Keep in mind, this is much broader than just banning TikTok. The whole bill in question, the quote-unquote TikTok ban bill, is actually called the Restrict Act, which for the federal government, at the very least, is a pretty good, pretty catchy name. So I don't know why we don't just go ahead by that. One of the more controversial elements of the Restrict Act is that it effectively allows the sitting administration to ban any technology service, any app that they want to, out of perception that it's a quote-unquote national security threat. So, for example, the example that everybody points to, if a given administration didn't like, a certain social media owner, maybe somebody who, bought one of the most popular social media companies in the world for $44 billion and has now changed up a whole bunch of the rules, just coming up with this example off the top of my head, and say the administration doesn't like that person particularly much. The concern would be that they could say, no, this is a national security threat, make some kind of bullshit argument just to get that app banned. So, this does give a lot more power to the federal government over technology services. It would, ban or force the divestiture of TikTok, but still, it's a very much kind of a slippery slope to be climbing. So we'll see how this plays out in court. Will TikTok get banned in the US if a divestiture is forced? How will this work? Who's going to win? Who gets control? Who decides? Who pays? Most importantly, is Brad Summer still on? There's only about a week or so left of summer, but please, somebody tell me if I can still act like a brat and get away with it. That about does it for us here today, guys. I want to leave you with a quote from Mr. Milton Friedman, one of the great economists of the world, about government getting involved in markets specifically. He said, quote, "The government solution to a problem is usually as bad as the problem." Nice, short and sweet quote for us here today, but a great way to leave us on this beautiful Monday. It's a little bit shorter today. Jesus, I really am trying to get these things down to 20 minutes, and these fucking rambles that I do at the end of the video probably don't help particularly much. But nonetheless, guys, if you like this stuff, if you have any suggestions at all, shoot me an email, leave us a comment, like, subscribe, boost our algorithm so that I can keep my job. That would be wonderful, and we will see you all tomorrow. Happy investing, happy trading. Don't blow up your portfolio in the meantime, and we'll see you there, all right? Hope you guys have a great night, and bye now.